Hey guys, welcome back. Drip Coach here with Drip and Farm for Property, where we don't trust, we verify, and operate with integrity and transparency. Today, just running through a couple clips that I saw on my feed on X. I'm not very big on X. I know it is definitely the place to be for the pulse on things real time, not just in crypto, but kind of the world at large. But I don't come here that often. But I did find these, so I just want to play a couple of these because it's one of those things where I don't really know what's quote unquote real. So I feel like I am seeing so much content on the broken monetary system, the potential for Bitcoin, the powder keg that's been ignited globally in regards to macroeconomics and stuff, but I feel like I see it because it's what the algorithm's feeding me based off of, what I engage with, and it feeds me more of that. So I don't know how real this actually is outside of the little space that I'm in. But because I'm interested in it, it just makes me want to keep a pulse on it and share it. But I feel like I'm seeing more and more content about the broken fiat system. And things like this make me feel like it's more than just my sphere. So as of this video, the giant Trump statue holding Bitcoin displayed outside US Capitol to mark Fed rate decision. So that is insane that he unveiled this statue at the same time, or off the heels of the Fed rate cuts. Like normally things like this would signal a top in the markets, but I feel like, again, to me, this is just letting us know that things are just getting started. What does that say at the bottom? Let's go back. I want to read the footnote down here, and we can't zoom in there. I would like to read that. It says Donald J. Trump golden statue is tribute to President 45 and 47, the Bitcoin president. Interesting. So either way, but because of that, just makes me want to play a couple of these posts, and then I'll just talk through them.
Of price scaling. And so
let's go back. This is from Bitcoin News, I believe.
Just from looking at this chart, you'll notice that, we'll focus on the diminishing returns, but look at just what it's accomplished in terms of orders of magnitude. And order of magnitude is a 10 to the plus 10. So if you look at the beginning, look at 2010, you're going from 10 cents there. It's gone from 10 cents to $1 to 10. So that's 1, 2, 3, 4, 5, 6. So we're going on, seven orders of magnitude of price scaling. And so we're slated to, as you pointed out, over the next 20 years to do another 10x and then another 10x after that. And so I think one thing that stuck out to me is the order of magnitude scaling of this is completely indicative of a power law, which again you find in physics. That's in fact, if you read the book Scale by Jeffrey West, you'll find that historically people use the term power law and scaling law interchangeably. So it's something that's defined by how many 10x's it can scale, which is.
You've seen me pull these specific charts up before in regards to the stuff that Plan B does, stock to flow and all that. And yeah, power law is one of those, and we have stayed within this range, this band, and it's on track. So this, just to think about this, obviously this isn't any kind of concrete math, but let's go back to this one real quick to show what I'm talking about here. They said since 2010, Bitcoin was officially created at the heels of the financial crisis in 2008, but it became kind of publicly tradable in 2009. So they're taking the first year after, but let's just start with 2009. So from 2009 until this video right now, 2025, that's 16 years. And like you said, it's gone up 1, 2, 3, 4, 5, 6. Well, you can't count 10, right? I guess you could, because I'm sure it started below a penny, but maybe it didn't. I don't actually know. But 1, 2, 3, 4, 5, 6. And then he says going on 7. So it's done 6 iterations of the power law in 16 years. Let's round that up to 18. And that's every 3 years, it's done a 10x. And like he mentioned in his video, it's likely that it will do another 10 and then another 10. So from 100,000 to 1 million to 1 million to 10 million. And then if you listen to Michael Saylor, I believe he said in 2045, it's going to be 13 million a coin. So that'd be the 10 million. 2045 is 20 years from now. So maybe we could have diminishing returns, but it's just interesting to see that every roughly 3 years, we've done a 10x. So the reason I bring that up is, could we see by 2026, that 1 million BTC price that some people are calling for, saying that will be the top and the cycle's going to run all the way into next year? I have no idea, but it is just interesting to see how this has kept this channel and done rather consistently.
Welcome back to Coach.
So 3 years, or going every 3 years, like I said, round this up to 18 divided by 6. It's every 3 years. This could take us 2026, 2027. We could see that $1 million price tag. Now, that doesn't mean there won't be any volatility along the way, but it is interesting. And just looking at this power law chart, we're looking at 50K BTC as the current level of support. So the higher band is looking at, or one deviation higher from here, or what they're listing as resistance right now, is 500K. So that's right now. Can we zoom in here? Yeah, that would get easier. No, that's not good. So here we go. So we go out here to 2026. That starts right here. And that puts us at the 141K as the median for that year. And 512,000 as the top, with a $50,000 floor. And out of 2027, we're hitting that 200K median, 700K top, 71K floor. So we'll see. I have no idea, but it's just interesting to think about. Let's go to the next clip. I was going to play this one, but I'll give you the TLDR. It's the French news basically saying exact same thing I showed you in a previous clip. That was like the CFO for Putin in Russia, stating that the US is going to essentially devalue its debt and using stablecoins and Bitcoin, or cryptocurrency in general. So it's like everyone knows the play. And if you're not paying attention, then you're going to get left behind. And there's nation states that are trying to front run this or sound the alarm, because literally it's our playbook. We've done it before. The US pulled the gold standard, made it illegal to hold gold first, and then pegged the gold to $35 an ounce, and then just shit on the entire Bretton Woods agreement and said, screw you, you're not getting any of this gold, and it's not backed by anything. So the same playbook could be running now, where we use stable coins, and that's what it looks like, stable coins and Bitcoin, to devalue the debt. And that's Jack Mallers' thesis, is like devalue the debt against what? And that what is gold and Bitcoin. We've played this one before. Looking for the next one. This one's a great clip. I had done a long form video on what is money, and I think this is a really great recap. Of course, much better quality than whatever I created. So highly recommend going out to Simply Bitcoin's channel on X and sharing this with people. But let's play this clip.
Rarity gave it value.
Oops. Let's make it here. And
throughout history, money has failed the people. Time and time again, inflation has eroded trust, destroyed savings, and brought nations to their knees. The tools change: shells, stones, coins, paper, but the pattern is always the same. On the island of Yap, stone money was once scarce and precious. Villagers risked their lives to carve massive rye stones and haul them across the sea. Each stone carried a story, and its rarity gave it value. But when outsiders arrived with ships full of new stones, something changed, and what was once rare became common. And when scarcity vanished, so did trust. Rome repeats the story in its own way. For centuries, Roman silver coins carried the weight of an empire, but emperors discovered they could fund wars and luxuries by diluting the silver, minting more coins with less and less metal inside. At first, few noticed, but eventually markets broke down, soldiers lost faith in their pay, and the economy of a mighty empire fractured. Many centuries later, the world watched Weimar Germany unravel. After World War I, the government printed marks to cover debts. Soon, the money was worth less than the paper it was printed on. Families rushed to spend wages before prices doubled by evening. Children stacked worthless bills like toy blocks, while parents stood helpless before shop windows they could no longer afford. Zimbabwe's tragedy was more recent. As trillions of dollars poured into circulation, bills carried more zeros but bought less each day. A $100 trillion note couldn't even buy a bus ticket. People abandoned the currency altogether, turning to barter, foreign cash, and anything more stable than their own money. Different places, different times, but always the same result. When money can be created without limit, it always is. And people, ordinary families, workers, savers, are the ones who pay the price. But in 2009, something different was born. Like a phoenix rising from the ashes, Bitcoin emerged. A money with no rulers, no printing presses, and a fixed supply of 21 million. It cannot be debased, nor inflated. It is secured by code, verified by a global network, and open to anyone, anywhere. For the first time in history, humanity has a form of money that resists corruption. One that protects savings instead of destroying them. One that is truly scarce. History warns us, but the future gives us a choice. The cycle can finally be broken.
And that's interesting that they didn't actually mention Venezuela, which is by far like maybe, I don't know if it's the most recent. Actually, most recent would be what just happened with Nepal. It wasn't money related, but they overthrew their government and instated a brand new one. So 100%, these cycles repeat themselves, and all you gotta do is look at history to figure it out. And one thing I wanted to note was this idea. You'll hear this moniker in the Bitcoin community that Bitcoin fixes everything. And there would literally be no wars if money was not printed out of thin air. So if you go all the way back to history, like they showed here, I was trying to find that clip, but basically soldiers were paid. Like you had mercenaries and you had people who actually, fought, and the government gave them money. That's why they were willing to risk their lives. And when these regimes and empires ran out of money, they would tax their citizens so that they could have money to pay the soldiers. They had war bonds. And essentially, if the citizens refused to pay for war or be taxed, then you can't fund the wars. So like Bitcoin being proof of work, how many people you think that would be in a Bitcoin standard would be like, yeah, I want to give a portion of my Bitcoin away for you to go start some shit with somebody else? No. It would automatically kind of nuke that system in the bud. And we're seeing that right now with rare earths. And I forgot what the latest post was, but like the US talked about creating a $5 billion fund for rare earths because essentially China has a monopoly on that. So, no matter how you slice it, we've seen this movie before, and the writing is on the walls. A $1 trillion note that can't even buy a bus ticket. Like, how insane is that? That is nuts. I don't think we'll see this with the dollar anytime soon, but what this video is showing is that it's still happening in real time with other countries right now, and very recently, within like the past decade or two. All right, let's go to one more clip by my buddy Jack Mallers from his last Money Matters podcast. Once again, talking about how the US and the middle class has been hollowed out. And again, I didn't know what this term actually meant until I started traveling abroad. When you can see the middle class by definition in other countries living a better quality standard of life than the middle class in the US, that really helps you understand what it means to be hollowed out. So if you can take a middle class US income and go into any of these other countries and live like a upper top 10 to 1%, then that lets you know that, yeah, the middle class has indeed been hollowed out. So let's play this clip real quick and then we'll look at some other numbers.
We're living in two separate economies, and the middle and lower class economy are getting demolished, are getting crushed. They need liquidity, they need help. We shouldn't look at America as this one big economy anymore. this fiat regime, this fiat era has decimated the middle class in the United States of America. You either own assets and are protected and are benefiting from debasement and destruction of the currency, or you don't. Let me explain it to you guys this way. If the third floor is the top floor, the penthouse floor, the elite floor, and the first floor is non-asset holders, paycheck to paycheck, and there is no second floor. If there's no second floor, the third floor people can't get to the first floor. Elite asset holders can't become poor, and the first floor people can't get to the third floor. They're working as hard as they can. They're getting degrees. They're working 2 jobs. They're not getting close to getting to the third floor. That's a very destructive society. That's a pain society. That's 2 different economies. Before Bitcoin, none of us on the first floor could own anything that the third floor owned. Now we get Bitcoin. No one can dilute our share in the 21 million. Fuck that. That middle to lower class, there's no longer a middle class. If you don't have the right assets, you're the lower class. It doesn't matter anymore. You have to get yourself some Bitcoin. It's the only ticket out that is sold to all of us.
I love the way he breaks that down. And again, it makes so much sense when you look at this depiction, because that's what we've seen. When you start looking at all the assets and how they quote unquote outperformed over the years, and then you evaluate that against the gold standard and you see that they've done absolutely nothing but flatline, and then against Bitcoin, they've gone down, then you realize exactly what he said. So it's like all these people were owning assets. They're on the third floor. So when the dollar got debased, that money just flowed into those assets. Those assets just went up in value because those people that own those assets were like, oh shit, we need to buy more of these, you know, because we don't want to lose any money. So they already had a shit ton of money and they already had a shit ton of assets. So they just buy more of those assets. Like Michael Saylor talks about his Manhattan property, or that one clip I played, I forgot the guy's name, but he's like, had houses all of a sudden become, you know, titanium, steel, alloy, never depreciating, breaking down or anything like that, and transportable. No, they actually depreciate, they break down, they require maintenance, but yet the value continues to go up. It's because the dollar is being debased and that value is going into those assets. So the assets aren't worth any more than they were before. Like my grandma's house, she's in Austin, one of the core areas. I think she bought her house for like 20K or something like that. And when she passed away, it was $500,000. It's like, it was the same house. She had never done anything different. They actually, when they sold it, they changed, like had to redo the foundation, had to redo a bunch of stuff. But the point is, that area, that neighborhood was still like the same. Living next to my grandmother, the same people still lived there. The neighborhood was still the same. It hadn't improved, hadn't gotten nothing. But the house, you know, 25x. Is that right? 25? Yeah, 25x. Over the course of like, you know, 60 years, of course, but still, just let that sink in. And it's like, that is insane. So going back to what I was talking about the middle class being hollowed out, and we'll hear Jack's video, like they're showing there is no middle class. When you look at maps like this, and you see this tier effect, like you're seeing the US is quote unquote high income. So this is living wealthy, so to speak. That means you'd be able to take your $13,000 and go to pretty much anywhere else outside of what looks like Europe, Russia, and Australia, and the UAE, of course. But you'd be living like a king or queen or whatever, because you would have higher income and you'd be in the upper middle class range, and in some places 10x more than the lower class. So I don't know how much, you know, greater than 14K actually is, but it's more than 14K. But when you look at these other places that I've been traveling to, they are in the 1 to 5K or 5 to 14K range. So obviously this is an average. So there's obviously people in the US making 6-digit figures and higher. But the point I'm getting at is that you see that there's only a handful of countries that are sitting above this threshold. And when they are able to take that capital elsewhere, they're clearly going to have a much higher living standard off of that. So the only option I see is to stay humble, stack sats, and get the hell out of high income places. That's my take on it. All right, let me know what you guys think about these clips. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See ya.